Today in crypto. According to strategists at J.P. Morgan, an approval of Bitcoin exchange-traded funds, ETFs, in the U.S. could be bad for the price of Bitcoin in the short term. The strategists claim that an ETF could see massive outflows from Grayscale's crypto trusts, and this could lead to a short-term bearish market for Bitcoin. Grayscale is currently the largest crypto hedge fund, having over $20 billion in crypto assets under management. An investment outflow from the company could be really bad for the crypto market. Analysts at J.P. Morgan had earlier said that Grayscale's investment in Bitcoin and its massive appetite to accumulate the digital asset was preventing it from correcting. As reported by Bloomberg, the strategists led by Nikolaos Panagiotsoglou wrote, "A cascade of GBTC outflows and a collapse of its premium would likely have negative near-term implications for Bitcoin given the flow and signaling importance of GBTC." Meanwhile, a recent tweet from Grayscale revealed that its asset under management, AUM, has declined by over 13% from last week. After reaching a record high of over $28 billion last week, Grayscale's AUM dropped to $24.5 billion on January 11. January 11, 2021 update: net assets under management, holdings per share, and market price per share for our investment products. Total AUM $24.5 billion, $BCH, $E.T.H. $etc. and $LTC, $XLM, $XRP, $ECPIC. Twitter.com/WGFT5 USANP, Grayscale, at Grayscale, January 11, 2021. Moreover, with claims that crypto-savvy Gary Gensler would be named the new SEC chairman, the approval of Bitcoin ETFs might be closer than ever. Bitcoin's, BTC, recent plunge could have been caused due to profit booking by institutional investors, according to a report by crypto fund manager CoinShares. The report noted a sharp drop in institutional inflows during the first week of the new year and weekly outflows from several crypto investment products. While the recent 28% decline may have scared some new investors, Bitcoin hodlers were likely unfazed as they've encountered 6 larger corrections during Bitcoin's massive bull run in 2017. Therefore, describing a 20% fall as a bear market may not apply to cryptocurrencies. Continue reading on Cointelegraph. President-elect Biden has finally decided on his nominee to head the Securities and Exchange Commission. At least according to Reuters' anonymous sourcing in a Tuesday report, Gary Gensler will be Biden's nominee as SEC chair. During the Obama administration, Gensler was the chairman of the Commodity Futures Trading Commission, in which capacity he was in charge of enforcing the many new provisions of the Dodd-Frank Act that followed the 2008 financial crisis. Continue reading on Cointelegraph. Ethereum has been sliding lower all morning in tandem with Bitcoin. The benchmark crypto led the market to see a rebound yesterday evening, but the selling pressure proved to be too much for bulls to handle. Rejected in the mid $36,000 region, while Ethereum rejected at $1,160. This has caused most altcoins to also plunge lower in tandem. Where ETH trends in the near term should depend largely on BTC and the rest of the crypto market, but its inability to flip one key resistance level into support could foretell further downside. At the time of writing, is trading down just over 6% at its current price of $1,020. This marks a notable decline from its recent highs of $1,160 that were set overnight. The cryptocurrency's inability to gain any momentum comes as Bitcoin faces a similar dilemma. Until miners slow the selling pressure they are placing on the benchmark crypto, there's a strong possibility that it will continue facing immense selling pressure that slows its ascent and creates tailwinds for the rest of the market. Is currently in a precarious position. Following what appeared to be a strong rebound, the cryptocurrency has erased its strength and drifted lower, finding some support at $33,000. This marks an over 10% decline from its overnight highs set at the peak of the recent rally. This decline may also mark the start of the second wave of selling, as one on-chain analyst who forecasted the last decline is now noting that on-chain data suggests miners may continue dumping their holdings. At the time of writing, is trading down just over 4% at its current price of $33,800. This marks a notable decline from overnight highs of $36,500. The crypto set these highs following yesterday's dip down to $30,000. The cryptocurrency is now trading squarely between these two levels. This may represent a new trading range for the crypto, although it remains unclear as to whether or not bulls will be able to guard against a break below its support. While sharing his thoughts on where will trend next, one on-chain analyst that he is now watching for a deeper sell-off. He notes that miners have yet to stop selling and could absorb any buy-side support from retail investors. Hit the like button and subscribe to the channel.